We're seeing some historical moves here in Japanese bonds at the moment, leading up into the Bank of Japan interest rate decision at the back end of this week. So let's take a look at exactly what's happening and what the potential implications could be for financial markets. So first and foremost, I was planning to make a video anyway because we've got this BoJ rate decision at the back end of the week. Essentially, it's Thursday night coming into Friday morning, depending on where you are in the world. And markets aren't expecting much from the bank, expected to keep rates steady at 0.75%. Alongside that, of course, we've got the likes of the inflation gauges coming out. We've got the PMI numbers coming out. All pretty standard stuff, really. And the feeling within Japan had been that they were essentially straddling the two sides of things, where you have more expansive outlook from the prime minister, who Takaichi is essentially coming on a ticket of fiscal expansion. At the same time, you're seeing the tightening from the central bank, who are looking to raise interest rates, especially if we see inflation elevated. But potentially that comes down a bit. As you can see here, inflation rate expected to drop down to 2.7% on Thursday. Nonetheless, things have taken a bit of a shift, and the wider narrative here is that we've been seeing a rise in terms of bond yields for many years now, essentially since the Japanese had to abort their yield curve control policy. We've been seeing yields rise and rise and rise, and certainly coming into this year, when myself and Mahana were talking about potential risk for 2026, the rise of the Japanese bonds yields was part of that. So the potential for a break in the carry trade, the potential for the repatriation of assets that are abroad, and their potential impact on foreign investments and foreign markets, all really played into that narrowing of the spread between yields in the US and other countries versus Japan. But certainly, the rise that has been very strong over the course of recent years has really ramped up, and I'll show it to you in a second. Part of that has been attributed to the fact that we're looking at snap elections in Japan, essentially for the prime minister to really push forward with her expansionary policies. One part that they've added to that recently is this idea that they're going to remove the consumption tax on food for 2 years. So all of it sort of plays into the same narrative, really. And that is that we have a government that's willing to be expansionary with their spending and grant gifts. In this occasion, you could say it's not inflationary because we're cutting prices. But at the same time, you're talking about a country that has a huge debt to GDP ratio, as you see here, 255. That's at 2023. And that's only ever going to climb higher and higher yet, especially when you have someone at the helm that is hell-bent on embarking on expansionary policies rather than something that is contractionary. And certainly her predecessor was looking to balance the budget in a much more sensible manner. But of course, people were feeling the pinch. After the inflation boom, some people would have got pay rises that were akin to the inflation rise. Some people wouldn't have, and they particularly would have really struggled. And so the idea that you were going to see a prime minister who was looking to balance the books and not spend too much, not give away too much, and raise taxes and things like that, that's not going to fly. And that's the difficult position that Japan are in, but also many different countries around the world. The idea of sort of fiscal conservatism being popular right now because that's what's needed is just not going to fly as things stand. So essentially, you've got a country that's got absolutely huge debt to GDP ratio, and you've got a prime minister in charge that is talking about essentially doing more of the same, right? Essentially enacting a expansionary policy that is going to push them further into debt. And so what does that mean in terms of the bond market? Well, it particularly means that people lose confidence in bonds, government bonds, supposedly the safest form of investment that there is out there, because it is essentially the risk-free rate of return that you get within the country. But what happens when the country just snowballs and they take on more and more debt? If someone can guarantee you they're going to give you a certain return on an investment, that's great. But if all of a sudden you see them spending and taking on more and more debt, you start to question the validity of those promises in the first place. If you look at in terms of inflation, this is what we're sort of looking at on Thursday to see if we do see this sort of come down, which would be welcome if it did. But certainly, you know, as things stand, the Bank of Japan finds itself in a very difficult position. Markets haven't really shifted that much in terms of expectations. Still expecting a hike before too long, and that would be sort of the midway point of the year. But whether that comes to fruition or not remains to be seen, because essentially the job of the BoJ with regards to inflation soon enough could turn to the job of the BoJ with regards to keeping a lid on yields, and whether that means some form of sort of expansive QE policy, whether that means trying to have some sort of yield curve control policy coming back into play, that remains to be seen. Let's just jump first and foremost into exactly what we're talking about here, and that is the 30-year yield. This is the weekly chart for the 30-year yield and shows you exactly how stark this move is. Here's the daily time frame. It's incredible. It's not normal at all, right? So essentially what you're looking at here is the possibility of a sharp move towards the upside that raises borrowing costs in Japan, that puts pressure on, of course, the public finances. It means that when they roll over debt, they're going to be in a position that means they're going to be doing so at a higher rate of return. It means that that debt is only going to snowball over and over again, putting the Japanese in a very difficult position. What does it mean for the rest of the world? Well, it means that there's risks for other countries, because you also see the rise in yields for other countries. They're all interrelated, these bond markets. So it poses significant risks. It means that the Bank of Japan are going to have to focus more significantly on what's happening in terms of yields, and not necessarily just trying to drive up rates with a view to keeping a lid on inflation. And so what does that mean in terms of the Japanese yen? Well, one way that they could try to drive down yields is to essentially buy them themselves, right? Because the demand clearly isn't there, and therefore people want to be paid more to be able to take on the risk. So if they enact a massive QE policy, that would be bad for the Japanese yen, and potentially stoke inflation, which of course would be problematic. On the flip side, if we saw yield curve control, that could potentially weaken the yen as well. So you're talking about the possibility of further yen weakness. What we're seeing at the moment is that we've not necessarily seen massive moves in terms of the yen as things stand. So we've come back into this trendline support for dollar yen. Do we see a rebound from here? Potentially. I mean, let's look up for how much of a narrative this actually gains within the public domain. But I think at the moment, everyone's really talking about Davos, and this is kind of going unnoticed by many. But it's a really interesting move that we're seeing at the moment. And you can see here this differential between US 10 years and the Japanese 10 years really coming off and declining in a very, very significant manner. If you look at the sort of daily time frame, yeah, we're coming off pretty heavily. But yeah, the 30-year is going to be even more stark, because the sort of risk premium that you see with the longer term yields means that generally you'll see the bigger moves in the long term yields, whereas the short term ones not to the same extent. So what we're faced with here is a Bank of Japan that isn't necessarily just trying to weigh up what's happening on the inflation front, but also trying to weigh up exactly what they should do in terms of stemming this rise in terms of yield. Some of the options that face us could be yen negative over the near term. That points towards a possibility that we see the bulls coming back into play around this sort of trendline support here. You can see that initial pop, then that faded. So market's really struggling to know what's what at the moment around this rise in terms of yields. And then alongside that, we've got the Nikkei 225. Of course, part of this whole narrative around the carry trade is the idea that people borrow in Japan on the cheap. They buy it out in, say, the US, big growth stocks, and then they make money off the back of that. Well, as it stands, it appears to be the case that your sort of pension funds and likes and investors aren't necessarily too keen on the Japanese bonds, because the value of them keep falling. Remember, is down. And so they're going to invest in other things. Will it be the stock market? Well, you probably wouldn't necessarily say so, just off the back of the idea that this spike in terms of yields really points towards more on unsustainable future. The flip side is if we do have a prime minister that embarks on an expansionary policy, then that's good for the Japanese economy. So the snap election now has increased importance attached to it for sure. But one area that particularly appears to benefit from it is gold, because the idea that you have people moving away from bonds as being the safest place to be, well, where are your other havens? And certainly the one that's been doing particularly well of late will be the precious metal space. And you can see here gold pushing into record highs once again today, kicking things off on a strong footing. And really this trend as it stands shows no signs of slowing down. I think this story out of Japan really feeds into that narrative. I hope this has been useful. Make sure to follow this story. I know there's a lot of talk about what's happening in Davos and around Trump, and for good reason. But this is happening, and it's a pretty big deal.